What's up, Epic family? This is your boy, Josh Rosario. I'm here to talk about psychological, or what I like to call them, bank levels. So, bank levels are pretty much commonly found on the daily, H4, and H1 chart. These are prices where banks place their orders at the most. Okay. Now, the way you find these bank levels is by the prices themselves, right? Just think about banks do not use the lower time frames to place their orders. They're usually on the monthly chart, the weekly chart, daily chart. And when they are placing their orders, they're going to place them at prices that are whole numbers or every 50 pips. And so you can use these levels as confirmation for your key levels, right? To make sure that your key levels are the most relevant and that they are in use. So with this pair right here, GBP CAD, the Great Britain pound against the Canadian dollar, I'm going to show you how you can find these bank levels and how they can be a extra confirmation for you in your trading. So here we are on a actual chart on GBP CAD, and I want you to just find your major support and resistance. If you went through the Epic University in Basics 1 and 2, you should know how to find your support and resistance levels. If not, please refer to Basics 1 or 2 to get a more clarity on how to find support and resistance. Now, here is GBP CAD. Okay. Now, our support level for GBP CAD on the daily is going to be in this area, right over here. And our support, our resistance would be right up here. Okay. How do we know this? We have a multiple points between these levels, at these levels of rejection. Okay. Every time they came up and down to these levels, they bounced off these levels, right? So now, and I won't tell you why. It is because when banks have a certain price that they want to set orders at, they place these orders at these levels. So once price reaches here, let's say banks place $100 million worth of contracts for buys, you can see how this particular spot at this point of time reacted to this level and pushed up, right? Also in here, this can be another $100 million worth of contracts for buys. And so it pushed the market upwards, right? That means buyers were in control. And same here, another 100 million worth of contracts for buys. Now, there is no telling how much banks are placing, how much orders they're placing at these levels, or how much money they're going to be placing at these orders and what type of orders they're going to be placing. But these key indicators here tell us that banks want buys at this area. Same thing goes with this resistance. Banks want sells at these areas. All right. And so how do we confirm that these are actual bank levels? Well, let's go back to the rules. So the rules say that price that is a whole number or every 50 pips, and these confirm your most relevant key levels. So let's check out this support level here. If we use a horizontal line or horizontal ray, whichever you prefer, you can place this tool right here and you can click on this gear icon, or if you can't find this little pop-up window, you can simply right click on the actual line and go to settings. Now here's the coordinates. So now we have a price that we set this horizontal rate at 1.59649. So every 50 pips from this number, the closest 50 pips would be 59500, right? And you can see how this horizontal rate kind of moved a bit. So now you can see how at this price, when it came to this price, it rejected. Now, the same thing could have went with the whole number of 1.60 flat. Okay. That could have been another key level that you could have used, another price that you could have used, or you could have used 1.590. Now, I prefer to have whole numbers instead of every 50 pips because they become a stronger confirmation. But as you can see, even at 1.59000, we still have reaction at this price. Now let's check out this area right here. Go to our horizontal array, place one right there, and change the price to see if it matches. And as you can see, 1.82000 is another price where banks could have placed orders at. Now we still have this little one right here, so let's see if we can find a better price. Let's try this one. So it quite touches this one, it fakes out in this area, but it doesn't really, well, as you can see, it kind of wicked right here. So yeah, so this was a great example right here, 1.80000. All right. So now, if you can find these on a daily time frame, you find them on a H4 as you go down and do your top-down analysis, because we have a wide range right here, 1.8000 and 1.59000. So every whole number could be a bank level. Okay, so let's check it out. And now they're going to be the most relevant. So this right here could be a key level, right? And remember, key levels are areas where it was once resistance and then became support, or once support and became resistance. So let's check this out. Let's check this price out. This would be 1.67. There you go. There is a key level, a bank level. And here's another one right here. Let's see, 1.7000. There we go. So as you can see, you can use these whole numbers or every 50 pips to determine your key levels, your bank levels, and where banks are placing these orders the most. So that way you can react to the market and use this as an extra confirmation for your charting and for your trading. Thanks for watching the video. I hope you gained so much value from it. As homework for this video, I would like for you to pick one pair, go from the daily to the 4-hour, and identify at least 3 bank levels and send it into the Trade House chat and tag @JoshLivinLife. I'll be checking your homework as soon as you post it, and I'll give you feedback on how you did. Thanks for watching. See you soon.